Hi, everyone. I see our attendees hopping on. Thank you so much for joining us for this webinar. My name is Abby Sachs. I'm the Assistant Director for Corporate Partnerships here at Grand Valley, and I'm excited to join with my colleagues in Alumni Relations and our friends at Consumers Credit Union for our Financial Sense webinar series. This is the third or fourth of these. So if you're a returning attendee, thanks so much for coming back. And if you're new, you're in for some really great information. This will be a great use of your lunch hour today. So thank you again for joining us. And Scott and Eric here, I will let them do their further introductions for themselves, are going to be our experts today. If you have questions throughout, please utilize the Q&A box. I'll be monitoring that, and we'll pop in with questions for Scott and Eric. They want it to be conversational, so as things pop up, if you want things reiterated, have specific questions, please feel free to shoot those into the Q&A box. And with that, Scott and Eric, I'll let you take it away.
Well, cool. Thanks. I'll let Eric introduce himself, and then I'm a ball hog, so I'll let him start.
Well, hello, everyone. My name is Eric Edgington. I am an office manager here at Consumers Credit Union, located here in Breton Village. And this is one of my favorite topics because we work with our members every single day with working through a budget and helping them problem solve through their finances. So we're excited to connect with everyone today and talk through some of these topics.
Cool. And I'm Scott Dobson. I've been with the credit union for about 18 years in financial services. I hate to say this, for about 25 years, but I've done everything from helping a teenager open their very first checking account to doing $10 million commercial loans and everything in between. But my favorite part is helping people have an aha moment or find something that really helps them with their finances. We run into lots of different people. And our goal today is to really maybe give you a lot of ideas, and maybe you pick one or two that will work for you to work in the future. It really works to give you a set plan. So we're going to go through some ideas, and hopefully one or two of them is interesting to you, and you can pick that up and move on. So we're going to talk about financial sense today. Like Abby said, if you have any questions, throw them in the chat, and she'll interrupt, and we'll make sure that we get those questions answered for you today. But really what we're going to talk about in general is just some ideas and tips about managing your money from the day you get paid to thinking into the long term, of ways to do that. And I know there's all sorts of ways, from Dave Ramsey, accounting for every single penny, to a million different ideas. And I always say that personal finance, even though it's a numbers game, it's what in your heart and it's in your soul and what matters to you. So take these as you will. And if you see something like, man, that really works for me, we would love it if you could take that idea and use it for yourself. That is not what I wanted to do. That's also not what I want to do.
And as we get into the presentation, we'll throw out some suggestions of things that I've done personally as for setting a budget in the past, as well as suggestions that we've made with working with people as well. So so Scott, I'll let you continue going from there.
Thanks. My first technical issue. I'll have 3 or 4 more because I talk to people for a living. The technical side is really not for me, but we'll get through it. We want to just do 5 things today. One is identify personal budgets and obstacles. What we mean by that is, my dad was a financial planner, and he accounted for every single penny. I could not do that. That does not work for me. So that was an obstacle that I thought I had to have a budget, was to account for every penny. Tracking and analyzing your spending. I like to make it simple and easy. Short and long-term goals. It's always good to know if you have a goal, it's easier to work towards that goal. Debt reduction and emergency savings can lower your stress, which is important to my heart and soul. And then give some strategies, real-world strategies of things that you can actually do starting with your very next paycheck to make your financial life a little bit less stressful, and to get you a little bit closer to your own goals that you have for yourself. First of all, what's a budget? That's the first thing that I started with. A budget can be anything, really. It's helps you live within your means. It's accounting for money over a certain period of time. and it helps you get to where you want to go. There's a million different definitions for a budget, and how you can manage your budget. We're going to give you a couple of different ways, but really what we wanted to do is to not take time, not be too complicated, and to de-stress your life. Budgeting to me, it can be, some people budget for their retirement 20 years down the road. Other people are trying to budget to next Friday so that they can get to their next paycheck. For us, we're going to start more with the maybe budgeting, thinking about a month. Most of us have bills due every month, and we get paid a couple of times a month. So for people who are redoing their budget or just getting going on their budgeting journey, sometimes it's easiest to think in short chunks of 1 month, then maybe break that down to payday every other week to decide how to manage your money within that budgeting. Why don't people budget? Well, they don't like to think about the future. Well, I don't like to think about the hassle of the future. I never wanted my budget to be complicated. I'm sure many of you have heard of Dave Ramsey. He's kind of the #1 financial guru out there. He definitely has a very specific budgeting regimen that he thinks that you should do with your paycheck, which is write everything down, get an envelope for every single item that you have, and then put money away on every payday to make all those things happen. And that could be a little bit too much for you. Maybe it takes too much time. Maybe your income changes from week to week, so that doesn't work for you. Maybe you're like me. Sometimes I have limited self-control, and it is a hassle. And the last one, which happened to me the first 5 or 6 times that I ever tried to start a budget, was I couldn't keep up with it. It took too much time. My heart wasn't in it, and I just let it go. And I just ended up going back to what I did before, which was waited till I got paid and then figured out what I was going to do with my money until the next 2 weeks.
And we're here to make this process simple. You know, we want to simplify it. Everyone has this idea that budgeting is very difficult. Where do I start? And what we're going to talk about today is really just simplifying that process so you can get started. We take those baby steps first, and then we kind of build off of it from there.
And I can tell you that last one, I can't keep up. I tried the Dave Ramsey. The first time I was short, I took all the money out of my other envelopes and I threw the whole system away. I had Dave Ramsey for about 10 days in total. And I had some other ones. So I really had to get it my budget so that it worked for me. And hopefully as we go through this, you'll pick up a couple ideas and say, that's how I'm going to start my budget. Knowing that it does not have to be a full budget. I'll tell you, I tried everything and I ended up trying to budget just one single thing, my house payment, which is the most important for me. And we'll go through kind of how I did that. And if you want to budget some of your spending items or savings items, how you might be able to do that. Goal setting. You should have a goal in mind of what you want to do with your budget. When I first started, I didn't want to feel like I was broke every payday. My budget for a long time, even though I had the tools, like I said, my dad was a certified financial planner and told me everything to do, but I had no interest in doing that. So my budgeting plan for the longest time as a professional working in a bank was I'd get my paycheck and figured out if my house payment was due or my car payment was due with that paycheck, because it's usually one of the other big ones. And then I'd look at all my other bills, decide what I was going to pay or not pay, figure out how much money I had left over until my next paycheck, and off I would go. I didn't have really any goals at all besides making it to my next paycheck without overdrawing my checking account. And even though I was successful with that for the most part, if you do that for a few years, if your goal is to make it to your next paycheck without being broke like mine was, I found out a few years later, I wasn't broke, but I hadn't reached any goals. I hadn't saved any money. I wasn't any closer to having a down payment for a house because I really hadn't set a long-term goal that I wanted to do, saving for vacation or paying off our debt or whatever it was. So as you start your goal, as you start your process for building a budget, I strongly recommend goal setting and what makes you feel good. For me, it was to having my bills paid on time all the time. And now I start thinking about my vacations a year from now and how am I going to save money for those and can I actually afford them? And then I looked down farther down the road as I got my short and midterm goals taken care of, then I looked farther down the road.
And if you struggle with setting a timeline for your goals, just start with creating the goals first. And then as we build the budget out, kind of identify how much discretionary funds you have left over, you can determine a timeline based off of that. So if at least you set your goals first, then we can really identify which bucket of time frames those goals can fall in.
Love it. And I would stress again that even though we're financial professionals, it doesn't do us a lot of good to tell you what your goals should be and how to get there. If they're your goals and you like them, you're going to be more apt to reach those goals. And then we'll give you some strategies of how you're going to get there. But I would really, just write these down and say, man, what is important to me? What will make me feel good? Write those goals down, and then we're gonna figure out how to get to those goals. Getting organized. Well, this is not me. I am a ADD person. I do not like to organize, but this is a real eye opener. We're going to show you a couple of sheets of paper in the middle here. But if you're not really a budget person, but if you have at least 15 minutes to think about your budget, I've found that if you get organized and literally take a piece of paper, or maybe even get on a spreadsheet if you're computer savvy that way, and just write down these things. It can be a real eye opener. It can really show you, wow, I have a lot of money left over at the end of every month that I could better utilize, or I'm spending every single dollar that comes in and I should probably do something different. So really what you'll need is all your sources of income. It's pretty simple for my family. It's my paycheck that I get, my wife's paycheck, and that's really all you have. But some people might have second jobs or Social Security income or anything else that comes in. But a list of all your incomes, a list of all your debts, which we'll talk about in just a second, what we mean by your debts, and your average monthly expenses, the money you spend on other things. So that's where we're going to go, and we'll show you here how to get a little bit more specific with those.
And just to make this easier, when we're talking about list of debts, sometimes it's easiest just to go to your online banking and pull a couple of months worth of statements. You can actually request it from your bank or credit union. They can print that for you. The local library as well will let you print as well. So there's a lot of resources out there to sometimes just get a piece of paper so you can go through it, and we'll kind of talk through how to organize those and get those prepared for you.
Yeah, literally just pulling up. I spend all of my money. It either comes out of my checking account or off of mostly a single credit card that I use. So by just looking at my last few months' statements, you can get some trends or see how much do you spend eating out. That's tough to just write down on a piece of paper. But if you can look through a couple of statements, you can just kind of highlight every place that you went out and every gas station you went to for your gas expense, kind of figure it out from there. Before we get too far, just a couple of definitions here so that we are all speaking the same language. Debt is money you owe to others. It's like your car payment or your house payment. Expense is a bill that you pay every month, like your electric bill or your cell phone bill. Needs. Now, these are your own definitions. Needs and wants are your own. So I need a cell phone to keep my life going. A cell phone might be a need for you. It might be a want. You get to decide that. Wants are the same. So they'll determine which column they go into, but we can't tell you what's a need or a want. You have to decide that. Budget is just a itemized allowance of funds. Here's what comes in. Here's what goes out. Can we make it make sense? And then your goals for short term, mid, and long term. Sources of income, this is not a complex spreadsheet. Like I said, when I filled this out for mine, I just used my after-tax income, the amount that actually gets direct deposited into my consumer's credit union checking account. I multiplied that by 2, and that's my monthly income. So that's pretty easy there. A little bit of math, and I do this. I'll tell you a little asterisk on sources of income. I get paid every 2 weeks, which most people do. So if you take your monthly income and multiply it by 2, you're shorting yourself a little bit because you get paid 26 times a year, not 24 times a year. But I don't mind leaving that little math out there as a buffer. So I just take, even though it's really a little bit more than that, I just pretend I get paid 2 times a month, and I add that in there for my income. Gives me a little bit of a buffer. So having your source of income, it tells you how much you have to spend each month and how much you have to spend each year. When I look at my own budget, doing it annually, the numbers just don't make sense for my brain. So I have to break everything down to a month, so that it makes more sense for my brain. Debt tracker, I love this slide, only even if it just gives you heartburn because of the amount of debt you have and what you owe. So this is not for expenses. This isn't your self-burden expense. This is money that you owe that's a lump sum that you're probably paying interest on. So my first one, debt, would be my home mortgage, my interest rate of 5%, my monthly payment of $1,200, and the $175,000 that I owe on my home. If you write down each one of these, then you know right now, man, this is next month, and every month going forward, this is how much of my income that I've already agreed to spend. I've already made a loan deal with someone, and this money has to get spent. But it gives you a good sense on one page of where all your debt is, whom you owe it to, and the interest rate, so that when you look at it later to say, do I want to tackle one of these and have it be part of my debt reduction strategy? Which one would I want to tackle first?
And a lot of these debts you can also find on usually your bank, website has like information about your credit report or creditkarma.com. A lot of times those are the debts that are going to be listed on your credit report. And that's what you would want to list here, is anything that has that monthly scheduled payment and shows up on your credit report is typically going to be listed under your debt tracker, which is separate than expenses.
Yep. And a good thing, and we're going to talk about after debt, we'll talk about expenses, bills you have to pay every month. Debt has a balance on it. Debt's like your car payment, your house payment, where there's a lump sum. You can't just shut it off like you could if you had a gym membership. That would be an expense that you have, but that's something you can just cut off. The debt tracker is you owe this money and you have to pay it back at some point. Different than this is expenses. This is where I put, like I said, gym memberships, utility bills, car insurance, home insurance, all the other expenses that I have to live my life. But they don't have a lump sum or an interest rate to them. They're just a spend that I have every month, including everything from my $15 for my car wash pass, everything else that's going to come out every single month as I go about doing my business.
And a great thing that I usually do with people that I'm working with on the expenses is when you're looking at let's say your bank statement that kind of lists all of those transactions and things that you do through the month, is I try to simplify these things. So like, for example, let's say you go to the gas station and you kind of buy, a soda, snack, and maybe grab some gas too. Anything that's listed as like a gas station purchase, I still list under as a gas expense, just to kind of simplify some of those transactions. So if there's like, a food expense, maybe it's, multiple different restaurants that you're dining out at, I'm going to make that all as just one food expense category. And then, even if I go buy my lunch at, at D&W or Meijer, for lunch, then I might still add that under my grocery budget. So that way you're simplifying all those transactions. And so what I'll do is I'll take some highlighters and I will have different colored highlighters, and I'll go through and I'll highlight all of my food expenses one color. And then I'll go through and I'll highlight all of my gas expenses another color. And then I'll go through and do that for each one of these categories. And then I'll go through and add them all up at the end of the month and see how much, I spent in that category. And then I'll plug that into my expense tracker as that monthly cost. So that's just one tip to kind of go through and just try to simplify those categories as much as possible. And then go through and add up all of your monthly cost for those categories. And that will help you kind of simplify your budget and have a better understanding of where you land in some of those categories.
And our goal of all of this is to just give ourselves our own snapshot of how we're using our money right now. We always see it in piecemeal, or you look at your credit card statement and say, oh, I owe this much on it, and you know what your income is. But I think the most important thing, a piece of advice that we can give you today is if you know these, I'm going to back up a couple slides, but it's not working for me anymore. If you just on a notebook like this, which is what I use, write down your expense tracker. Oh my goodness. Sorry, my screen is just went nuts. Write down your expenses, write down your income. It can get you to this page right here, which is budgeting your monthly expenses. If you can write this down, if you just know this is just an example of someone that wrote down all of their needs, all of their wants, their debts. They know that their total monthly expenses is $2,170. And that's what they've agreed to spend. And it just gives you this snapshot to look at this and say, all right, here's where I'm at right now. And then you can decide if there is anything that you can change and what you might want to change. For me, I looked at it and said, okay, can I do anything about my rent? I'm not going to move apartments. I'm going to stay there. But maybe I should shop my car insurance. We always see, save $700, whatever it is. And it just like, oh man, I haven't shopped car insurance in a couple of years. You can probably save some money, maybe with your home insurance. My own, as I went through my own, I found that I was paying $15 for my car wash pass for my car that I had sold 3 months ago. I'm like, oh, geez, I guess I can reduce that $15 expense because I'm not getting my car washed anymore. But this just kind of gives you your own personal snapshot of where you are with your own finances. And you can look at this and see what gives you anxiety to see what changes you might want to make for your own finances. The last and easiest piece of math that you can do, if you take the total amount of money that you make every single month, subtract out everything that you've already agreed to spend every month, it leaves you with your discretionary income. I call that birthday money, vacation money, trips money, whatever it is. And this really gives you an idea of how you're doing. If your discretionary income is less than $0, then we need to go back and do some work and get rid of some expenses or figure out how to increase your income. And if you do have discretionary income, then just to look at it and say, well, I've got some extra money. What should I do with it? Should I be saving for my future or should I be buying a Ferrari? I don't know. It depends on your own income, but this is a nice little, just a piece of math to have to understand where you're going. The 50-30-20 rule. This is a very general rule. If you do your own expenses to say, man, am I kind of in the norm of where this rule should be at? It basically says this: spend half your money on your needs, spend 30% on your wants, and 20% to debt repayment and or savings. This is just a general idea. It's not perfect math. It doesn't work the same. It's the same for everybody. But you can certainly look, if you know that 85% of your income is going towards needs and 0% is going to savings and debt repayment, that might be something that you would want to try to adjust. And these are not solid. We did get a wonderful question on whether this ratio would change, knowing that it seems like recently, especially post-COVID, that our expenses have gone up and seemingly our incomes have not, which is a true statement. So maybe you do have to adjust this, and this is, it's not an exact number. If you're at 52% and 28% and 20%, that's totally okay. These are trying to just keep you in line. If you can spend more than 20% of your income on savings or debt repayment, I say that's awesome. If you're spending 80% of your income on wants, I would say just make sure that your needs are being met. Maybe your needs are low and you're in a great position. But this is just kind of a general rule to see if where you're spending money is around what economists would consider healthy. Needs versus wants. We talked this a little bit before. There is a difference, and I can't tell you what the difference is between needs and wants. Groceries is definitely a need. Coffee can be in your groceries. Instead, going out for coffee, it could be a need or a want. You just need to categorize them for yourselves because it's just what makes you feel great on inside and what you need to do to live the life that you want to live. So there's an endless list, and it can be whatever you want. It's most important that you've determined for yourself, if you have to cut your bills, which is a need that you cannot cut and which is a want that you can cut.
And when you're doing your budget, is sometimes you may need to cut some of those wants in order to achieve some of your financial goals. But a cut from a want doesn't have to be a permanent thing. You can always add that in later after you've achieved some goals or your financial picture has changed. So sometimes you have to do the work now to get that payoff a little bit quicker. And sometimes you can spread that out over a longer period of time. It's just up to what is important to you.
Yeah, and if you're doing it, hopefully it goes back to it makes you feel good. If we're going to talk about debt reduction, hopefully, for me, there was times when I said, all right, I'm not going to do this fun thing this year because I want to get these 2 credit cards pay off and they're stressing me out. And I decided for myself that I would feel better about paying off the credit cards than I would about doing the fun thing. And I just then needed a strategy so that I could make it happen. So I could see those gains and I would feel good about it. So we're going to talk about once you've written down your debt, some debt repayment strategies. Most of us have some sort of debt. And if you filled out that form that we showed you earlier, it looks just like this. You can look at who you owe, what the interest rate is, and how much you owe them. And if you have this all written down, it puts it in black and white for you to say, all right, here's what I owe. How do I want to tackle this? What's going to get me to success? There's a couple of basic ways, the avalanche and snowball. So the avalanche method is the thing with the highest interest rate bugs me the worst, and I want to pay that off the sooner. So if you look at this and say 26% is outrageous, I hate that. An avalanche payoff method would say, okay, I'm going to take all the extra money that I found in my budget that I'm going to use for debt repayment, and I'm going to put it all towards my major credit card at 26% to pay off that high interest loan first, so that what I have left over is a lower interest. Second is the snowball method. This is what I use because I need gratification a little bit more quickly, and I like to get a quicker win. So if this was my debt right here that I was going to tackle, I would look at this and say, all right, I want to pay off this $800 balance first. I've looked at my budget. I've got an extra $200 a month that I can apply to some of my debt. I'm going to put it all towards this retail credit card, because if I put an extra $200 on this thing, I'm going to have it paid off in 4 months. I get to cross this off. Now I only owe 3 debts, and that's going to make me feel better. So that's the strategy that I used. And I set these up and used the set it and forget it strategy, so that I can get a little more personal satisfaction a little bit earlier and get that paid off. Eric, what's your favorite?
I love the snowball as well. I usually go that route because it's having the wins, and then it's seeing that monthly payment and that cash rolling up to the next debt and getting that paid off even faster. So you can really see that snowball progress as you're paying off your debt. So that's one of my favorites as well.
Yeah, and the second part, so these all have a minimum balance. We all have a budget. We're paying the minimum balance every month. But if you go through a budget and find an extra $200, this retail credit card maybe had a $15 minimum payment, and we decide to pay $215 on it, and we pay it off in 4 months. Well, we don't now it's gone, and we can take that $215 and add it to the minimum payment of my next favorite, which is this personal loan, and now making 215 plus whatever that minimum payment was to help pay this one off more quickly, which helps pay the second one off even more quickly without having to spend any more money. So it really helps you build that progression. And when you finally get to the biggest debt, you're making the biggest payment on it, helping you get paid off more quickly, hopefully helping you feel good. And every time you get one of those victories, you high five yourself and say, all right, let's do this and pay off another one.
And there's some other strategies that you can also tie into that to pay those things off quicker. And that's something that we can always help with at another point if that's something you want to talk about.
I have a question that was actually submitted prior to the webinar about the idea of getting a personal loan to tackle credit card debt. If you guys want to speak to that, obviously thinking about like the interest rates, the logic might be, okay, if I can get rid of this 26% interest credit card loan and then have a 15% interest personal loan, do you have any experience with that? What would you recommend to folks?
Yeah, that's a great question. I'll speak to that. So there's a couple factors that play into that question, and which is depending on how much unsecured debt that you have. And unsecured debt is basically like a credit card. So there are certain limitations that banks or financial institutions have with the amount of unsecured debt that they will lend out to an individual person. So if you're trying to roll and consolidate some debt into another unsecured type of loan, you may or may not qualify for something like that. So that's one strategy that you could do that could potentially help with reducing your overall monthly payments. You can also look at home equity lines of credits, which typically have a lot lower interest rate, where you can do debt consolidation loans as part of that. And that's a really good strategy for helping consolidate debt and having one payment to pay off those debts a lot quicker. And then finally, the other option would be to do a balance transfer on a credit card. So a lot of times credit card companies will offer you 0% interest for 12 to 18 months. They might charge you a 4% fee to transfer that debt. But what that will do is within a couple of months, if you were paying interest on those debts already on those credit cards, then usually after like 2 to 3 months, it'll pay for itself. And then you're sitting in 0% interest territory, where then you can apply that debt snowball approach or to help reduce that principal amount of those credit cards and pay off those expenses or those debts a lot quicker.
I totally agree. I think there are some circumstances where a personal loan could be the right choice, but there's a lot of variables involved. If you have a great credit score, a personal loan takes good credit because there's nothing securing it. So it's harder to get a personal loan than like a car loan. But if you can do that, you basically what you're trading is, I have this credit card with minimum payments I can make forever and ever and ever, but I want to trade it for a 4-year personal loan or a 2-year personal loan. I'm going to take all this debt and I'm just going to make bigger payments on a lower interest rate and pay it off. So I think Eric's got a great point. If you do have good credit and you're like, I want to pay this off in 12 months, it might make more sense to get a 0% balance transfer. And if the balance is $1,200, to be like, okay, I'm going to put $100 on this every single month and get it paid off in the 12 months. So I think it's mostly the commitment to an elevated monthly payment if you want to reduce credit card debt. And you can do it with either a lower interest rate personal loan. If you are a homeowner and have equity in your house, you can get a much lower interest rate and have more protection there. Or you can kind of debt snowball yourself and say, I'm going to do it this way. So I think it's one of the factors that goes into reducing your debt, and a great thing to think about for sure. Also to think about is emergency savings. For me, it has always been personally stressful if I did not have any money in the bank. and I did not have any protection if something happened. My car broke down, or any, if like something quit in the house, whatever it is. The average emergency is $2,000 in America. So it should make us feel better to be able to cover those emergencies. And there's a couple of ways to do it. Obviously, people like us would just say save $2,000 and keep it in your savings account, which seems easy, but if you're just getting your budget, might not be first on your list. Another interesting idea that I've had for me, who's not very good at having my own willpower, is maybe getting a credit card. If you have good credit, applying for a credit card, and then literally sticking it in a Ziploc bag full of water in your freezer and freeze it in there. So you have a frozen credit card in your freezer. So if all of a sudden, Black Friday comes and there's the best deal on a 100-inch TV, your credit card is frozen away, so you don't take advantage of that great deal, and you have that savings there. But for most of us, it reduces our own stress to have an emergency savings account, so we know if something happens, we have something to do with that.
And this is probably the number one thing that throws people off of a budget is they start their budget and then life happens and something pops up where there's a financial shock and that they have to pay for, and then they have to put it right back onto a credit card, and then they find themselves right back in the situation they were in before. Especially if you're trying to do that debt snowball. So, part of the strategy is putting some money aside, and when you build out your budget, making sure that if you do have some discretionary money, putting some into a savings account that you can hide from yourself or whatever that looks like, but having some money set aside to cover those expenses so you're not having to put it back onto a credit card and then starting that vicious cycle over again.
Yep. And the bottom one, remember to get insurance. The thing that, if you're a homeowner and you have a mortgage, they make you get insurance. If you have a car with a car payment, they make you get insurance. But I've seen more examples in my 25 years of banking of renters who the apartment above them flooded or the apartment below them had a little fire and it ruined all of their clothes and stuff. And they didn't even realize they had $12,000 worth of stuff in their apartment that was just gone. Renter's insurance is typically very cheap and can be great. So that's the number one piece of advice I can get you is renter's insurance if you don't have that. Bring up your money. You do all those things. You write everything down. You're like, shoot, I wish there was a bigger gap between how much I make and how much I've decided to spend every month. So tips for spending when you're going through, look at those subscriptions. Yesterday, McAfee antivirus just sent me an invoice that I renewed my antivirusware on my laptop with them, that I forgot that I even had that subscription. I'm going to keep it, but I was not thinking about that. Shop around, check clearance aisles, things like that. Yeah, rules for deals. The only one for rules for deals on the bottom, do I need it? I've oftentimes found the most awesome Black Friday deal on something I wanted, but I didn't need it, even though it was an awesome deal.
In the budget, this is a great time to look at your car insurance. See if you can find a cell phone plan that's a little bit cheaper. See if you, if your internet expenses, that you've had the same internet service for a long time, maybe you can change that and get a reduced expense there. So just kind of looking at all of those regular things that you pay and you just haven't talked to anyone in a while to get a new quote. Now is the time to start doing that, and it does take time. So just go at it periodically and check things and call around, and you'll find out if you either have a good deal or you can save some money.
And I found in my own personal experience, I've seen the ads, 15 minutes will save you 15%, or switch and save $700 on your premiums. Like, how can they reduce your premiums by that much? I found in my own personal experience that after you get new homeowners insurance and new car insurance, they raise your rates on you. And if you're not checking every 2 years, you're probably paying several $100s too much. So it's kind of one of those necessary evils to go through your homeowners insurance and your auto insurance every year or two. But it could make a $1,000 difference if you did that. Sticking to a budget. Boy, I tell you what, this is the hardest slide for me. Like I said, when I did Dave Ramsey, and I literally had 9 envelopes on my kitchen counter, and I cashed my check and I put money into each envelope. I knew that I did not have the willpower to leave that money sitting there for 2 weeks, waiting for my next paycheck to come while that money built up. So I had to employ some different strategies to stick to my budget. Focus on rewards. Obviously, where do you want to get? Is your goal more important than what you're giving up to get to that goal? Number 2, for me, this was the most important step, was to utilize technology. For me, I wanted to make sure that the bills that were important to me, all of my needs on my list were taken care of, and I wasn't stressing about those. So I wanted to utilize technology for those. So we got a couple minutes. I'll tell you what I do. I told you the number one thing that was most important to me was to pay my house payment on time. So assuming my house payment is $1,000 a month, and it's November now, and I got paid last Friday, the 12th, what I would do is take $500 of my paycheck, half of my payment, and I moved it from my Consumers Credit Union checking account over into another checking account that I called my bills account. So a week and a half ago, I got $500 that went into that account. And this Friday, I'm going to get paid again, and I'll have another $500 to go into the account. So on the 23rd, I'm going to have $1,000 sitting in that account called my bills account. And then on December 1st, I have an automatic payment set up from my bills account to my mortgage company. So on the 7th and 21st, my 2 payments, 500 and 500, come in. The first of the month, my $1,000 goes out. And that's how I started my budget, was I just budgeted that one thing. So when I got my paycheck on Friday, if my paycheck was $2,000, I looked online and I got $1,500 deposited into my account. And I could see that that's what I had to use on my debit card, because that 500 was over into my spending account. And I didn't see that when I looked online or on my debit card. I had it over here. So it automatically goes in there. I never see it. And on the beginning of the next month, it automatically gets paid. I never worry about it. So I never see the money when it comes in, so I don't miss it. And it gets automatically paid when it goes out, so I don't have to worry about that. And my favorite thing about that is with my house payment, like I said earlier, I was putting money in every other week, which means in 2024, every other week I put money in. I put money in 26 times, and 12 times money came out. So in 2024, I put one extra mortgage payment into my bills account. So at the end of the year, there was an extra $1,000 sitting in there. So by not doing anything, I had built up a $1,000 emergency fund for my mortgage payment, because I had that in there. And once I got comfortable, after I just had the $500 coming out of my paycheck, once I got comfortable with that, then I added my car payment, $350 straight in. First of the month, $700 out for my car payment. And then I did it with everything else in my life that was due at the same date for the same amount. I had to come out of my paycheck automatically and put over there automatically. And after a year, every bill that's important to me that I decided was important had been paid on time. I had a 1-month emergency fund for all of those bills. And it had improved my credit score, and I didn't have to think about it one time. So utilizing the technology was key for me to implement my budget, because I didn't have to think about it every 2 weeks or every month, only if I wanted to make a change. Third, common spending areas. That's an easy one to do, to just, well, for my wife and I, eating out. It's an easy one to see, to look at the month and say, geez, oh, Pete's, we spent way more than we anticipated. So being aware of those things, and then stay up to date with real-time spending feedback and reminders. Your financial institution probably has alerts, or they can send you text messages. If certain things happen to your account, you can certainly do that with us, to help you understand when something happens, or if you've spent more than this, or if a big bill comes out, to have that real-time reminder. If your spending account gets under $50, it'd be nice to get alerts so that you don't overdraw your spending account. Those types of things can really help you not have to stay on top of your budget, but to give you those reminders when you need it.
And just to answer one of the questions that popped up in the Q&A is, do we offer any spreadsheet templates or resources for that? And yes, we absolutely do. We will make sure that it gets over to Abby and so she can get it out to whoever would like it. But we do have some really great resources that are easy to fill out and a follow along guide to help you with creating that budget. And then of course, any of our Consumers Credit Union office locations, we'd be more happy to sit down with you and really work through that if you want that one-on-one assistance as well.
Perfect, thanks. So in summer, we're wrapping it up here. Really understanding your income and understanding the debts that are going out. It can be an eye opener and a game changer just by writing those numbers, physically writing them down and seeing them in front of you. Increasing your emergency savings is just going to make you feel less stress with yourself. And I can tell you personally that the less debt that I owe out there, the better I feel. So I go back to, I only do personal finances to make me feel better about myself, and owing less and having more saved in the bank obviously makes me feel better. And there's a lot of tips and tricks to use. Only use the ones that resonate with you. Pick one thing, start with that, see if it doesn't help make your financial life feel a little bit better. And then just keep noodling around for new tricks that can help you do a little bit better with your personal finances. Lastly, if you're interested, Consumers Credit Union, you can go to our website. We have lots of digital resources available 24/7. If you want to learn more about any financial topic, it's completely there for you. And if you want to reach out to Eric or myself individually for any questions, you have our phone numbers and our emails on the screen right now.
Thank you, everyone. We appreciate you.
Thanks so much, Scott and Eric, for sharing your expertise. And I took away some stuff that I learned as well. So always great to be here. If anyone has any questions, feel free to shoot them in the Q&A. We'll hang out for a few minutes afterwards. But thank you so much for joining us, and be looking out. We should be sending up a follow-up email with some additional resources and information about our events that our alumni team puts on. So thank you again so much for joining us for the Financial Sense webinar series, and happy Thanksgiving, everybody.
Thank you.
We do, Eric and Scott, have one question about apps like Rocket Money. I'd love to get your thoughts on that.
I have no problems with Rocket Money. I think anything that's digital that will help you, and if that's the world that you live in, that's awesome. For me personally, I like to have a digital assistant, and then I want to be able to walk in or be able to connect with a real human on top of that. So I think Quicken and Rocket is a progressive company, and they do have some good ideas. And if you are a online digital person exclusively, that could work great for you. I run into a lot of people that they like to get started with the digital or use it once they get it figured out, but they also from time to time would like to just plop down and say, okay, what do you think about this? Am I crazy for paying this off or redoing this? So I like having great technology, but then having real humans behind it. It's a little tougher with Rocket because they're totally digital, but I don't think that besides they are a sales platform and they do want to sell you financial products. Most do, so that's not really a negative. So I have nothing negative to say about them. I just like to have a human behind it that can also answer questions.
And I would say too, like a big piece of it would be to actually go through like what we talked about before and really look at how you're spending your money. Rocket Money will maybe give you some of those generalizations, but it's not going to be perfect. when you categorize those things yourself and really kind of see where your spending is at, it gives you a little bit more buy-in to making change. And so I always recommend, just doing it the old-fashioned way with a piece of paper and some highlighters and really kind of adding it up will be much more impactful to you initially. And then you can add in those types of technologies if you think that would be, save you time on understanding your expenses.
I'm going to say it. Well, I said it 3 times. Eric could not be more correct in the process of literally writing it down and not having the computer just like spit it out to you is it changes in your mind how you think about it and makes it more real than having an app say, you're spending too much on going out to eat. It just, the physical writing it all down and seeing it all add up, I think is more impactful. But if you do that and then use technology to make your life better, have at it.
Yeah, awesome. I personally have been using a budgeting app for the last few years, and starting with the process of just knowing how much I spent on groceries a month was like really empowering because I wasn't
Yes.
tracking those things before. So it does make a huge difference to like get a handle on what your spending even looks like, and then you
Yeah,
can
and
dive into
if
those
you're out
things.
there and you don't know how much you spend on groceries every month, neither does 97% of Americans. You're not alone. And it is a very interesting thing to then, because you know how much you spend when you go to the grocery store, but when you add it all up or see it for a year, it can have a much different impact on your psyche.
Yeah. All right. Well, thank you again so much, Scott and Eric, and I hope everyone has a great day.
Cool.
Thank you,
Thanks
everyone.
again.
Appreciate it.
Take care.
Yeah, bye-bye.